So we all remember GameStop, what happened with GameStop and AMC and all the meme stocks and the stonks. And everybody wants to know, is Best Buy going to be the next GameStop? Well, there's some similarities, but there's also some differences. One of the main similarities, Ryan Cohen right in the center of it all. And to be honest, out of everyone who benefits the most, Ryan Cohen is one of the top ones to benefit. If we look at his investments, when he invested in GameStop, he invested 6.5 million shares that he purchased. Initially purchased them for 61 million, then became worth 664 million. Then he purchased another million in 2020 for 24 million, worth 127 million. Then the last batch that he purchased lost him 110 million. His recent purchase in Best Buy, he bought over 9 million shares and it's worth 198 million, $53 million profit. Well, if we look at their net income, the last 3 years, they've been negative. They've been letting go of a lot of employees, and overall, their revenue has been declining and they're not doing anything special. So his initial reason for investing in GameStop, he felt that GameStop was undervalued and he wanted to make major changes in GameStop. There really hasn't been much change other than investing in some NFTs, but the stock has been on a decline ever since the big sell-off. And really what helped push GameStop was just the overall hype, Reddit and Roaring Kitty, short interest, which was over 100%. And analysts at Goldman Sachs later noted that the short interest exceeding 100% of a company's public had only occurred 15 times in the prior 10 years. So there was a lot of hype around GameStop. It's a little different. So the short interest for Bed Bath & Beyond is over 58%, but it has been declining quite a lot every day. I'm sure people don't want to get squeezed out. So the first thing we see similar, of course, is Ryan Cohen investing in Bed Bath & Beyond, saying the same rhetoric that he can turn it around the same way he wanted to turn GameStop around, which really hasn't turned around. Are we in the right environment? It's not the same environment. There isn't as much money being pumped into the stock market like before. There's a war, there's high inflation, higher interest rates. There isn't the perfect storm like before, but it's not impossible. And if we look at GameStop, we see here trading between $19, and the first day that it spiked over 100%. So if we look here, when it started spiking up on the first day, it was trading $19, went to 38, almost 100%, then pulled back and gave half of it back down to like $30. Then the second day didn't break the previous high and kind of consolidated a little bit, and finally broke the previous high, then pulled back a little bit and it consolidated again, made higher lows, then it just took off all the way to close to $500. So Bed Bath & Beyond, it's on day one right now, kind of the same thing. Went from $16 to $34, so spiked over 100%. A lot of the shorts got squeezed out. They didn't want to get stuck on another big push, especially a meme stock like Bed Bath & Beyond. Right now, it's trading above a few moving averages. It spiked up, sold off quite a bit. If we see here, it was trading below the 9 EMA all day today. Hasn't been able to break the 9 EMA, and towards the end of the day, the 9 EMA and the 20 crossed over and it broke above the 50. So right now it's above all its moving averages. There is a lot of overhead resistance. Here we have heavy resistance at 23 and right above 23, almost perfectly 23.54. So between 23.20 and 23.54, there's resistance. And then there's 61% on the Fibonacci area. That's also going to act as resistance. So if you are bullish and you do want to day trade this, you're going to have to be careful. It's going to probably be volatile, but the first area of major resistance is between $23.40. There's a lot of resistance in that area. It does seem to be uptrending right now, but you do have to be careful when you trade this. I don't think we're in the perfect environment for another major rally to $400 or $500. But if traders don't find anything else to trade, they may want to day trade this. You may get a squeeze. If it does start to squeeze, there's still a lot of shorters in this stock that may want to jump out and you may see another short squeeze. I don't feel like it's going to do what GameStop did, and I don't believe in the company long term. I don't know what he sees, but maybe he has some sort of inside analysis that makes him bullish on the stock. But he was bullish on GameStop, and the only reason he was extremely profitable was because of the hype that surrounded it, not because GameStop has turned around. So I think this is going to be similar. I think there's going to be spike, there's going to be some hype, and maybe we'll see for the next few days if we can get constant movement. Hope you enjoyed that video. Please check out some of my other videos.